Good morning, everyone. Good afternoon and good evening to those of you tuning in around the world. Thank you all for joining our event today in Energy Industry in Transition. I'm Sam Ori, the Executive Director at the Energy Policy Institute at the University of Chicago, or EPIC. For those of you who are attending an EPIC event for the first time, EPIC is an interdisciplinary center at the University of Chicago that brings together scholars from throughout the university to study all aspects of the global energy challenge, from energy markets to pollution and climate change. We're incredibly pleased today to welcome back BP's Chief Economist Spencer Dale, who is responsible for advising the company's board and executive team on economic drivers and trends in global energy. Spencer's been with BP in this role for 6 years now. Prior to that, he was executive director for financial stability at the Bank of England and a member of the Financial Policy Committee. Between 2008 and 2014, Spencer was chief economist at the Bank of England and a member of the Monetary Policy Committee. He joined the Bank of England in 1989 and served in numerous roles, including private secretary to Mervyn King and the head of economic forecasting. Spencer is also a senior advisor, he served as a senior advisor at the US Federal Reserve Board of Governors between 2006 and 2008. So welcome, Spencer. This summer, just to provide a little context, BP announced that it was aiming to be net zero by 2050, a huge announcement. Against this backdrop, this fall, the company released its annual energy outlook, which includes a number of bold predictions outlining what a clean energy transition could look like from their view. Today, Spencer's going to highlight or share some highlights of BP's energy outlook, including what a net zero world could look like. Moderating our conversation is EPIC's 2000 journalism fellow, Robinson Meyer. Rob has been a staff writer at The Atlantic for 7 years now, the past 5 of which he's covered climate change and environmental politics, and is now the author of the newsletter, The Weekly Planet. I would invite you to subscribe. It's must read. His reporting has brought him from Capitol Hill to the Greenland ice sheet to Viking ruins on the Faroe Islands. He was an inaugural winner of the SEAL Award in Environmental Journalism in 2017, and so we're very excited to work with Rob. Rob and Spencer, we're honored to have you both here with us today. This is just an incredible thrill to kick off our programming for this year. Before heading into our conversation, just a couple quick housekeeping notes. Spencer is going to lead us off today with a presentation of the energy outlook, followed by a conversation between him and Rob. We will then open the event for questions from the audience, and at that time I would ask you to use the raise hand feature in Zoom, and we will unmute you to ask your question. You will need to accept the unmute before continuing with your question, so please be alert to that, and begin by stating your name and your affiliation. Spencer and Rob, thanks again so much for being here with us today. We're really thrilled to have you, and with that, I'm going to turn it over to Spencer for his presentation.
Thank you, Sam, and good morning, everyone, or for anybody coming from Europe or other parts of the world, good afternoon and good evening. Hi to you as well, Rob. You say you're thrilled, Sam. I'm by far and away the most thrilled person. This is a great honor for me. We were talking, I came to Chicago in about 2 or 3 years ago in 2017, and I spent all of my life studying economics, and there are places in the world where they are the home of the discipline you study, and Chicago is one of those. So it was an enormous thrill coming to the university for the first time in 2017, and I'm really pleased to be invited back, so thank you so much. By far and away the hardest thing I'm going to do now is try and share my screen, so if we can get past that bit, and then everything's going to go really well from then on. So let's see if this will work. Okay, that's looking encouraging. Okay, I think that's worked. So as Sam said, I'm going to focus my comments today around BP's energy outlook, which we published in September of this year. So it's only a couple of months old. Much of the outlook is focused around different scenarios for the energy system over the next 30 years. So it's looking at those decarbonisation pathways. And we use those scenarios to help shape BP's new strategy, this strategy that we think will get us to net zero by 2050 or sooner. Now, a key part of our approach when thinking about those scenarios is to recognise that all of those scenarios will be wrong. We can't predict the future. We know we can't predict the future. The role of scenarios the way we think about scenarios is not to predict the future, but rather to help better understand the range of uncertainty we face over the next 30 years. And if we can build up a better understanding of that uncertainty, we can then design a strategy which is robust and resilient to that uncertainty. And we can talk a little bit more about how we think of that resilience and how we use scenarios in that way in the Q&A, if you'd like, Rob. What I want to do today is not think so much about the pathway to net zero. What I want to do is actually think about, well, what does net zero mean? What do we know and don't we know about net zero? Much of the world has committed to net zero. What is, quite striking is since this energy outlook was published in September, Japan, Korea, and perhaps most notably of all, China have committed to net zero targets just in the last couple of months. And many people on this call will know better than I, but I think much of the world is excited that perhaps a new US administration will also commit to a net zero target. So that raises the question of what do and don't we know about the global energy system at net zero? Now, in this year's energy outlook, we include our own scenario, which gets to net zero by 2050, which is called somewhat unimaginatively net zero. So BP has its own net zero scenario, but that's only one scenario, and that scenario will be wrong. Okay, so if we want to think about the world in net zero, we need to use a range of other scenarios. And to do that, to help get a better understanding, what we did is we looked at a range of scenarios which were which were compiled to support last year's IPCC special report, the Intergovernmental Panel on Climate Change, their special report on global warming of 1.5 degrees. So the chart I've shown you here shows carbon emissions from energy use of 112 scenarios taken from that IPCC database. And these 112 scenarios were all the scenarios which were consistent with meeting the Paris climate goals. Of those 112 scenarios, 84 of those scenarios at some point between now and 2100 get to a point where carbon emissions from the energy sector are zero. So what we did as a sort of exercise is we said, right, let's look at those 84 scenarios. At the point where they get to net zero, freeze them, look at the structure of the energy system at that point, and use that to start to build up a sense about the range of uncertainty we have about different aspects of the energy system. Just to give you an idea about sort of the time dimensions here, the median scenario that we looked at hit net zero in terms of the energy sector in around 2070. The earliest hit it in 2045, which I think you can see in this scenario here, and the latest right out at 2100. And over 2/3 of the scenarios achieved net zero between 2060 and 2080. So they're clustered in that 20-year period between 2060 and 2080. And then by looking across these scenarios, we can sort of start to build up some confidence bands for different aspects of the energy system. And the charts I'm going to show you over the next 15 minutes or so exclude the top and bottom 10% of each scenario. So I'm going to show you, if you like, some sort of rough way of thinking about this is a sort of P10 to P90 confidence bands I'm going to show you as a way of hoping to get a better sense about what we do and don't know. And by way of comparison, I'm also going to show you what our net zero scenario says about different aspects of the energy system, just to sort of see how our particular scenario compares with those ranges. So that's the sort of the exercise I wanted to think about. So in terms of the first question, if you lined up 10 students from the EPIC Center and said, write down a blueprint of how the world would get to net zero, my guess is all 10 or a vast majority of them will say, look, the first step is to decarbonize the power sector and electrify everything you possibly can. That then raises sort of two important questions. First, how much of the energy system can be electrified in net zero? We know many elements of energy use can be electrified relatively easily. But there are other things like high temperature heat processes in industry or long distance transportation, which are harder to electrify. And the second question it raises is what role will wind and solar power play in that decarbonised power sector? In terms of that first question, in terms of how much of the world's energy system will be electrified in net zero, this purple bar here shows the sort of the P10 to P90 range from the IPCC scenarios of the share of electricity, electricity in final energy consumption. And you can see it ranges from around 40% to around 70%, with the median shown by this black line here of around 55%. So just over half of the world's energy system electrified in this median IPCC scenario in net zero. And that compares with the share today of around 20%. So the role of electricity increasing by around 2.5 times relative to its current share. The blue dot here shows you the share in BP's net zero scenario, which is pretty similar to that median. So somewhere between 50 and 60% of the world's energy system being electrified. In terms of that second question of the role that wind and solar power will play in a net zero energy system, that's shown by this orange bar here, with the share of wind and solar power somewhere between 40 and 85% in those IPCC scenarios, with the median share of wind and solar power in power generation around 60 to 65%, which you can see by our blue dot is pretty much in line with our net zero scenario. And what we found when we were producing our net zero scenario is as the share of wind and solar power increased much beyond that 60-65% level, the cost of dealing with intermittency, the intermittency of wind and solar increases, and that slowed the rate of penetration. And that's why you don't get 100% wind and solar power. It's that cost of intermittency starting to rise. And as you can see here, for the median, that range is sort of, that intermittency sort of levels are getting high, around a 60-65% level. So I guess the next question is, if 55% or so of end energy use is electrified, this suggests that we need other sources of zero carbon energy to complement electricity in this net zero world. If we can only, what sorts of forms of energy are going to provide the energy to the other 45%? And that generates a role both for hydrogen and also bioenergy. So this first, the light purple bar here on the left shows the role of hydrogen in final energy consumption in those IPCC scenario. And it ranges from around 4% to around 12% of final energy consumption, with a median of around 7%. Now, for those of you who are following sort of some of the current commentary and discussions about the potential role of hydrogen, this is quite a bit smaller than many people are talking about the role of hydrogen could play today. So this is quite a lot smaller than much of the commentary. And by way of example here, these two bars to the right here show the role of hydrogen in BP's net zero scenario, which is a little over 15% of final energy consumption, so quite a bit higher. And one reason for why you're seeing this smaller share of hydrogen in these IPCC scenarios may reflect the fact that many of these IPCC scenarios were produced several years ago, before we saw this heightened interest in hydrogen. And so I think one thing to monitor going forward is to the extent to which, as the IPCC scenarios are updated, and they're updated on a quite regular basis, this share of hydrogen in net zero increases over time. The two bars relating to the role of hydrogen in BP's net zero scenario show you both the role, how hydrogen is being used in the energy system, shown by this bar, where the majority of that hydrogen is being used in industry, shown here in red, particularly in terms of using it to decarbonize high temperature heat processes, and also in transportation, particularly for long distance road transportation. So we're seeing the emergence of heavy duty hydrogen or fuel cell trucks. And this final bar shows you how that hydrogen is produced. And you can see that we have a broadly equal mix in 2050 in our net zero scenario between so-called blue and green hydrogen. And we can discuss sort of some of the technical aspects of that blue and green hydrogen in the Q&A if people would like. In addition to hydrogen, there's also an increasing role for bioenergy. And that's shown by this green bar here for the IPCC scenarios, where the role of primary energy, of bioenergy within primary energy ranges from around 5% to around 18% of primary energy, with a median at around 10%. And as you can see, BP's net zeros in BP's net zero scenario, the role of bioenergy is broadly similar at around 10%. In BP's scenario, the majority of the bioenergy is coming from biomass, shown in this light green bar here, with the majority of that biomass being used in the purple power sector. But we also see an increasing role for biofuels, particularly those liquid biofuels helping to decarbonize different parts of transportation, particularly aviation, which is hard to decarbonize using other energy sources. And also an increasing role for biomethane, or I think it's called biogas or renewable gas in the US, which can be used as pretty much as a direct substitute for natural gas across all sectors of the economy. So over half of the world electrified, then playing an increasing role, supported by this increasing role for hydrogen in industry and the power sector, industry and transportation, and also increasing role for bioenergy. But this then raises another question. If you've got this increasing importance of electricity, hydrogen and bioenergy, what role does this then leave for natural gas and oil in a net zero world? So this first chart here looks at the role of natural gas, where the share of natural gas in primary energy net zero in those IPCC scenarios ranging from around 5% to around 18%, with a median of at around 8%. And that compares with the share of natural gas today of around 24–25%. In BP's net zero scenario, the share of natural gas is slightly higher than the median. It's around 13%. So roughly halving the role that natural gas plays in the energy system today. One feature to notice from BP's net zero scenario is around 3/4 of the natural gas which is still being used in the net zero scenario in 2050 is being used in conjunction with CCUS, so carbon capture, use and storage. And so essentially that gas is being largely decarbonized and used either as a direct source of energy, shown by the hash bar here, or being used to produce blue hydrogen, shown in blue. The role for oil in the net zero scenarios is lower, with the median of around 7% share in primary energy. That compares with a share of oil in primary energy today of around 33%. So the share of oil declining by around 80% or so in terms of its role in the global energy system. And you can see the BP scenario, net zero scenario, is broadly similar, around 7% or so. In terms of barrels of oil, in the BP scenario, that 7% equates to, in 2050, equates to around 25 million barrels a day of oil consumption in 2050. For those of you who don't carry these numbers around in your head, the level of oil consumption today in round numbers is around 100 million barrels a day. So so oil consumption falling by around 75% or so. And as you can see in the BP scenario, around half of that oil continues to be used in different parts of the transportation system. And the other half is predominantly being used as a feedstock particularly in petrochemical sector, where the oil is not combusted and so is not generating carbon emissions, at least at the point of use. The final question, and then I'll stop, the final question I wanted to consider is what role might carbon capture, use and storage, CCUS, and natural climate solutions play in a net zero energy system? And the role of CCUS in the IPCC scenarios is pretty striking, shown in this wave here, where the range for the role of CCUS is between 8 and 18 gigatons of CO2. To put that in perspective, the current level of carbon emissions from energy use is around 33, 34 gigatons of CO2. So between 1.25 of all the current carbon emissions from energy system are captured using CCUS in these IPCC scenarios, with a median around 13 gigatons. And that seems very high relative to other estimates. You can see in BP's net zero scenario, we have around 5 gigatons of CCUS by 2050, and that 4 or 5 gigatons is sort of more in line with many other types of external outlooks. So perhaps I sort of take 2 points from the size of CCUS in this IPCC scenarios. I think first, in keeping with lots of other research, the IPCC scenario suggests that CCUS is likely to play a significant role in an efficient decarbonisation pathway. There's mounting work and growing evidence that decarbonisation pathways, including CCUS, tend to be cheaper or more efficient than those which exclude it, and the IPCC scenarios support that. I think perhaps the second point to take from this is getting to net zero is really hard. And so from a modelling perspective, the CCUS sort of helps to solve this problem. It sort of gives you, if you like, a little bit of a magic wand when you're trying to get rid of those last 2 or 3 gigatons of CCUS in your model. It's tempting to put it into CCUS. And so I think part of the sort of challenge when you see numbers like this is we need to challenge ourselves as to whether this size of build out in carbon capture, use and storage is really plausible. And if it is really plausible, what policies will be needed to support and incentivize that sort of build out. A significant amount of the CCUS in the IPCC scenarios is used in conjunction with bioenergy, which is so-called BECCS, bioenergy with carbon capture and storage. And this provides a source of negative carbon emissions. And the median value of BECCS in the IPCC scenarios is around 8 gigatons, which you can see is significantly greater than in the BP scenario, which is around 1.5 gigatons. But even in that BP scenario, where you've got about 1.5 gigatons of BECCS, that's sufficient for the power sector to be net negative by 2050. So offsetting emissions in other harder to abate sectors. And so I think the message I take from this is the role of BECCS opens up the possibility of thinking about the power sector as being net negative in a net zero world rather than just carbon neutral. And the final chart I want to look at is the IPCC scenarios also show a significant role for natural climate solutions as a source of negative emissions stemming from reforestation and other improvements in land use, with a median of around 4 gigatons of negative carbon emissions from this source. And this negative number here, if people are thinking about how to interpret this negative number, that's because in some of these IPCC scenarios, they assume that forestry and land use actually gets worse over time. So let me stop and just wrap up, and then I'll hand back to Rob. The meta point here, I guess, is the belief that the scenarios should be used to help better understand uncertainty, not to predict the future. In terms of what we do and don't know about the global energy system and net zero, I think there are some qualitative features of the energy system which seem relatively likely. An increasing role for electrification and for wind and solar power to play a key role within that decarbonised power sector, but limits to the role of both of those trends. The growing role of electricity supported by increasing importance of both hydrogen and bioenergy, with a significantly declining role for oil and natural gas, but with natural gas being more resilient than oil. And CCUS and natural climate solutions also playing a material role in the net zero energy system. So I think those sort of qualitative trends are things that perhaps we do know. What we don't know is pretty much every one of those IPCC bands I just gone through are pretty large and wide. And so there's considerable uncertainty about just the scale of these changes we're likely to see in a net zero world. Let me stop before I go on too long. I will try and stop my screen and hand it back to you, Rob.
Absolutely. Well, hey, thank you so much. And thank you for the presentation. Thank you for being here. If we were in a if we were in an auditorium in Hyde Park, then I'd invite the audience to applaud at this moment. But we are not, so please applaud throughout your homes, scattered across the world. And I want to also thank Sam and EPIC for having me today and for having me throughout this fellowship. I'd hope to do more of it in Chicago, but it is in the high 30s in Washington, DC today. So I feel like I'm getting something of the experience. I want to start, I know we just talked about kind of what the outcomes of net zero would look like. Now let's talk about pathways briefly. Can you just start by giving us a sense of, almost to get the audience up to speed of how BP is allocating capital or making decisions today based on the projections you just shared with us? How have those changed its business?
Yeah, it's one of, and there's a sort of, I would call a Goldilocks type thing here, where you want to go not too fast and not too slow. And if you can get criticized by some groups of people saying you're going too fast and others saying you're going too slow, then if you've got equal amounts of people telling you wrong on both sides, you may be just about right. What we have said is we will reduce our production of oil and gas by around 40% by 2030. So in some sense, perhaps to backtrack here, what do we mean by net zero by 20? And our aim and ambition is to get to net zero by 2050 or sooner. In some sense,
as a company, as well as as
a company. And you could spend a day with experts defining what you mean by net zero, and there's all sorts of subtleties in ours, but the essence of what our net zero scenario, what our net zero ambition is that the carbon emissions that we're responsible for, the carbon that we're responsible from extracting from the ground and introducing into the world, should be net zero by 2050. And you can make it net zero by one of three ways. One is by capturing the carbon when that energy is combusted, so with carbon capture and storage. Secondly, by offsets, that natural climate solutions, or by just producing less oil and gas. Mm-hmm. Okay, they're the only three things you can possibly do to get to net zero. And 2050 is a long way away, so I think both as a company for our strategy, but also our shareholders and our staff and society want to know, well, what's your milestones going forward? And one of our key milestones is by 2030, our production of oil and gas will fall by around 40%. And our investment in low carbon or zero carbon technology energy would increase very substantially. So, and so by 2030, we will look and feel like a very different company.
A much more diversified company. And just to draw out some of those subtleties, in terms of, does that mean that when a consumer buys BP oil in in 2050, I suppose, in this world. Will that oil be, will the emissions from that oil already be accounted for, or just the kind of extractive emissions, the emissions involved in taking it out of the ground?
So if they were buying genuinely BP oil, then it would be net zero oil in a deep sense,
Okay.
not just the emissions associated with our operations. But so this is, and this is an important point. Our net zero ambition isn't just in terms of our operations; it is all of the carbon associated with the oil and gas we extract from the ground. The caveat here, Rob, and it's an important caveat, is if you go to a BP filling station, we sell an awful lot more oil than we produce. And so we're not committing to get to net zero all of the oil of other people's oil that we sell but we don't produce. What we're saying is we will get the oil and gas that we produce to have a net zero footprint.
I see, that makes sense. One last question about BP, and I think that one you probably hear often, when this is before you joined the company, this is before I reported on energy or even graduated from high school, but 20 years ago, or nearly 20 years ago, BP rebranded as Beyond Petroleum. It announced that this kind of transition was coming, that it was moving beyond oil. And then due to a series of shocks in the energy market and kind of 2 unfortunate oil spills and a number of other factors, it, I think, left that scenario by the beginning of the recovery from the Great Recession. Why is this time different?
Yeah, it's a great question. And I think there's a lot of pride in BP that we were one of the first companies to speak very openly about climate change and the role that fossil fuels played in climate change, and trying to shift as a company and move our company in that direction. And I think we learned an awful lot from that episode. And BP is one of those companies where people stay a long time. In 6 years, I'm just about seen not as a new kid on the block now. And so there's a lot of DNA stays in there. And I think we made some errors in terms of what we did then. So at one point, I think we were the world's second or third largest manufacturer of solar PV panels. And guess what? We have no comparative advantage relative to mass production in China of solar PV panels. So in some sense, we lost money on that. We also invested in a lot of business models which were sound, but they were based on the view that by now, carbon prices around the world would be $40 or $50 a ton.
Yeah.
And what you know, and many people on the call know, is there are very few places in the world where carbon prices are $40 or $50 a ton. And so what we ended up doing was the business model made sense, but it was very hard for us to go more quickly than the rest of the world was moving because you lose money. What's different this time around, Rob, I guess, is that way we're approaching our strategy. We're not assuming that we're on a decarbonisation pathway. Some of the scenarios in our outlook are consistent with meeting the Paris climate goals. Others of the scenarios are not consistent with meeting those Paris climate goals. And what we're trying to do is pick a strategy which is robust and resilient for a whole range of outcomes. So our strategy does not depend on policy changes. It will be greatly enhanced by policy changes, and we will do everything we can to advocate for those policy changes to help support a sort of accelerated pathway, but we're not banking on them. And so our strategy is robust to a variety of different outcomes where, if you like, that Beyond Petroleum assumed that the world would see what we were seeing and would respond to that, and unfortunately has been quite a lot slower to do so than we hoped at the time.
What's the, I suppose the way of asking this question is why might this time not be different? But when you look at the next 20 years or so, what's the biggest question about how the transition will play out? And well, let me just first ask that, but if you answer with a policy answer, I'm going to ask you to go past it.
Okay, so I think perhaps the way to think about it is the way we spoke about it internally, and I like to think about it is I like using this quote from Herbert Stein. And Herbert Stein was the chairman of the Council of Economic Advisors in the early 1970s. And Herbert Stein had a saying, and his saying was, if something can't go on forever, it will stop. Okay, and at one level, Stein, and this is known as Stein's law. And at one level, people go, well, that's pretty obvious, Spencer. It's quite profound and deep when you think about the nature of our energy system at the moment. We're on an unsustainable path. Carbon emissions are continuing to rise. We don't need carbon emissions to stop rising. We need carbon emissions to fall in absolute terms to zero. What's happening at the moment can't go on. If something can't go on forever, it will stop. And what we are thinking about as a strategy, as a company, is at the moment, our company is, we haven't got 100 eggs, more than 90 of our eggs are currently in that oil and gas basket. And what we are doing over a period of time is shifting those eggs, moving them across into other forms of energy, low carbon, zero carbon energy, making ourselves, if you like, a far more diversified energy company, and making ourselves far less exposed to the fact that Stein's law will hold. This one, something can't go on forever, it won't. And that's really important when thinking about a strategy which is robust and resilient.
I think I love Stein's law, and that's really interesting. I was not familiar with it. I think outside of BP, like as an observer of the global energy system, looking forward to the next 10 or 20 years, what's a question where you're like, oh, it's really going to be interesting to see how this one plays out?
Okay, so I think there's two massive unknowns to me, I think. I think one is, do we look back at the pandemic and say that was a point, or a significant turning point, a significant point of inflection for the energy transition? And the energy transition was so much faster beyond that point. And I think there's powerful forces in both directions here. So and it's by no means definite which way this will go. So on the one side, the nature of that pandemic means that many governments today are focused on the resilience of their domestic economy, the resilience of their health system, the resilience of their access to personal protective equipment, trying to rebuild their economy in the near term. And so if their focus if much of their attention is focused on domestic near-term issues, the amount of space they have to devote on global long-term issues, which is what climate change is, may be less. And so you may get a detraction away from that. I think many people would argue that the amount of attention paid to climate change immediately after the 2008-2009 financial crisis declined because you focused on the here and now more. The counter argument is that COVID has highlighted, if you like, the fragilities of the planet and the fragilities of the way we're living in our planet today. And the scale of the government interventions around the world, the unprecedented scale, give us a sort of, if you like, a once in a generation opportunity to turbo boost the energy transition to in the common phrase, in terms of to build back better, to ensure that when we're encouraging and stimulating growth, that growth is greener, more sustainable than before. So I think that's one. I think the other one, clearly what happens to America is massively important. I think, but for me, the other really big unknown, if I had a crystal ball, if I could look at it and see what it says, is what do we make of China's announcement to achieve carbon neutrality by 2060? I think that is not the pathway they're on at the moment. I think that pathway, that announcement, I think for many people, including me, was not something I expected. My understanding, I'm not a Chinese expert by any means, but my understanding, if China commits to a target like that in public, globally, that's a significant thing. And I think, can China achieve that? And if it does, how will it do that? I think it's really profound. It's profound partly because China is such a large energy consumer and such a large emitter of carbon emissions today. But also by doing that, it could revolutionize the world. So China, to a very large extent, has revolutionized wind and solar power because it just produces that technology so cheaply that everybody else can benefit from it doing it. Will it do the same with hydrogen in terms of the equalizers to do that? Will it do the same in terms of CCUS technology? So I think it's what will happen to China. Will it achieve that path, that target, and that sort of, what would that pathway look like?
Is there a particular technology question that you're focused on here outside of the kind of national question?
So I think less so. I mean, I think it's sort of, I think most people now, it's like that net zero work we've done here. I think those vectors that we need to achieve to get to net zero are sort of quite well understood. We need to decarbonize the power sector. We know how to do that with wind and solar supported by batteries and CCUS. A role for hydrogen, a role for bioenergy. And so I think, to me, the way I think about this is clearly technological progress is important, and as we use those technologies more and more, the cost will improve over time. But it's not like we're sitting around saying we need a technological breakthrough. We don't know how to do this. We do know how to do this. The challenge is applying the technologies that exist today at the pace and scale necessary to achieve those decarbonisation pathways. And in doing so, that will in itself generate the sort of improvements in technology over time. And so I think this is less a how do we do this question, and it's more can we do it. And perhaps just one final point, one of the things we try to bring out in the Energy Outlook is there's a very key role for governments to play here in terms of government policies. But governments can't do this on their own. There's limits to how much government can just force a very quick decarbonisation pathway on the world, partly because you just can't pull your levers that hard. But there's a more general point here, is the legitimacy of pulling those levers very hard will be challenged if it's not supported by society. And so we get to a key part of that net zero scenario I was describing in BP is partly it's policy, but there's also, we assume, a significant shift in societal behavior and preferences, which accentuate that and make it easier to achieve some of this decarbonisation. And so I think it's sort of, we need to build a constituency supporting the decarbonisation. So it's not for somebody else to do, it's for all of us to do. Companies like BP, but also you and I as energy consumers.
How much of that is responsive or resilient to carbon pricing? I think when BP was looking forward 20 years ago, as you said, it said, oh, there's going to be a $40, $50 carbon price in most of the developed world by then, or most of the world. Obviously, we're not there. I think even 5 years ago, when I started covering climate change, the expectation that kind of the only driver of serious policy, of serious decarbonization was a carbon price was, let me describe, like much more the consensus view of people involved in the kind of policy world than it is now. There are still absolutely people who, including many folks on this call, I think, who are champions of it. And I think from an economic efficiency argument, it's pretty hard to beat. But how much of, when you look at those kinds of changes or what governments can do, how much, when you think about it, is a carbon price versus kind of these other policies versus consumer demand that kind of winds up accelerating?
It's a great question. And I think my own personal views, I should speak personally here rather than BP, we're shifting because, as economists, carbon prices are beautiful. We know they're the right solution to this. And so from an economic perspective, we know carbon pricing works. But the realpolitik issue here is, I look around the world and it's very hard to see it anywhere. And I don't think that's because the politicians didn't take Economics 101. I think they did take Economics 101, but they find it pretty hard to do. And I think, so I see a role for carbon pricing, but I think we also have to sort of see that perhaps that we may be in a second best world and we can't wait for carbon prices to make the breakthrough over the next 10 or 15 years. We may need to do other things. There's a book just written recently by David Victor and his colleague Danny Calderwood, I think is where to say his name, which is sort of makes this point. It makes the point that in theory, carbon pricing is great. In practice, it's just very hard to make work. So we may need to do other things. And if you want to get hydrogen into transportation, we may need to actually take more of a sector-specific route. We may need to sort of play a role where you use sort of sector standards, low carbon fuel standards in different sectors, other ways of trying to do this. And so either directly or indirectly, you raise the carbon price in those sectors a lot higher than the general carbon price. At this point, the economists will hold their nose, and we have to hold our nose, but it may be the way in which we can achieve that. I think the other thing, and this is sort of, I think, a really exciting development and a source of optimism, is I think one of the features over the last few years which has been really surprising is the way that we see society demanding change more quickly, if you like, than governments. And you see this particularly in companies like us committing to net zero. And part of the dynamic of that is the people that invest in us demanding that we do that. And so those two things go together. And if you like, when we commit to get to net zero and our shareholders request that we take part in that, if you like, the carbon price that we're willing to pay is significantly higher than the carbon price that is being set by government. And I think that dynamic, if you like, society leading governments rather than governments leading society, we can see it. You know, it's happening in real time. I mean, and I understand that I'm speaking from Europe, and there may be some people in the call who just think Europe is a sort of different world to that in the US. But I mean, I would say that, you know, over the last few months since we've announced our new strategy, I've spoken to a number of investors in America as well. And this is not just a European phenomenon. And I think that is exciting. And again, then the carbon price, there is an implicit carbon price, but it's being one set by society rather than one set by governments.
Last question, then we'll go to Q&A. So if you have a question, start thinking about it now. Also, there's like 30 different places we could go. But you've given this talk or versions of this talk, I think, all over the world. What have you learned in the course of doing that? And then what do people ask you? And specifically, what do people ask you in China when you give this presentation?
Yeah, well, one thing I've learned is it's a lot easier to doing that in lockdown than it is normally. Normally, I'll spend 2 or 3 months on a plane traveling around. But now, you know, literally, in some days I spoke to Tokyo in the morning, Brussels at lunchtime, and then in the evening somewhere in America. So it's a lot easier to do. I think it varies where you are in the world and the conversations you have. I think one thing which is striking is when you're talking in emerging market economies. So I've given this talk in China 2 or 3 times, in India 5, 6, 7 times over the last couple of months. The challenges there are very different to the challenges that we face in developed economies, be it in Europe or be it in America. Now, part of that challenge is that in many of those economies, they still have many people who are living in relative energy poverty. The average American today consumes roughly 12 times more energy than the average Indian. right? If you want one sort of factoid to carry around in your head. And so sometimes they can look at you as if you're focusing too heavily on carbon emissions, they can pull you up a little bit and say, hold on, the world needs two things here. It needs less carbon, but it also needs more energy. Have you forgotten about the more energy that we need? And let's not forget, let's not take your developed world view and impose it upon us. And I've been chastised politely because several times along those lines. The other one is it matters a lot in terms of the decarbonisation pathway, because if you're trying to decarbonise the power sector in Europe or in the US, it's hard, but it's doable, and it's partly because overall power demand hasn't really grown over the last 10, 12 years. I mean, it's been pretty flat. It's one of those sort of things, unless you follow it, you wouldn't know. You think the world's electrifying. It sort of is in parts of the world, but overall power demand in our developed world haven't changed. And so every amount of renewable energy you produce can be used to substitute a fossil fuel, to take out coal. If you're somewhere like in India, that's a completely different story because power demand is growing really rapidly. And so you have this sort of challenge. And so if you're in India today, coal accounts for 55–60% of coal power generation. And if you're on a decarbonisation pathway, you need to grow renewable energy sufficiently quickly, both to meet all of that growth in new power and also substitute out for coal. And that's an incredibly hard thing to do. And so in our scenarios, the demand for natural gas in India increases more in the decarbonisation pathways than they do in a business as usual case. And you go, well, that's really perverse. How come you're consuming more of a fossil fuel if you're decarbonising? And the point is, because I can't grow renewable energy sufficiently quickly. They're already growing 30 or 40 fold, and they're growing crazy strong amounts. But that's not enough to both meet new demand and to decarbonise. And so you also need this increasing role for natural gas. The point here is, if you're sitting in one of the major capitals in Brussels, in Europe, or in the US, you may see more gas-fired power stations. That's a terrible thing. But if you're sitting in the emerging markets, it may be by far and away the smart, efficient decarbonisation pathway. And so the point, I guess, to remember is the world is very different here, and particularly the challenges faced by the emerging world is very different to the developed world. And it's really important because much of the narrative and conversation is being driven by the developed world. And it's important that we don't impose our solutions and say, well, they must be right for everyone, and then it's not. And I guess one of the privileges of either doing virtually or physically moving around the world is you're very aware of those